Good afternoon, everybody. Let's just play. Okay, good afternoon. I'm going to run through a story. It's kind of good to run after Piedmont and after Lake and after Standard and kind of look at a company that is about to probably have its biggest year in its corporate history next year. So I'm going to run through it. I've only been with the company for about a year, never heard about it last November. Got asked to join as a president and COO. Raise the capital, advance it through the PFS study, advance it through the FS study, get through the resource. It's been a very successful last year. I'm going to just see if this works. Lots of forward-looking statements. We are miners. So looking back at last year was a big year for the company. They did their only financing in the corporate history after 6 years at 62 cents. Don Ross, from the chairman of LEAD, bought the entire placement. So he's now the second largest shareholder. We engaged an engineering group. I joined, adjusted the board. We completed a PEA. So this presentation is going to talk about the PEA, our structure, and a lot of comps to our peers of where we are today, how we rank against everybody except for the Piedmonts, who have, they've got a great valuation. And I'm going to highlight our current valuation, our cash position, and hopefully you'll take a look and wonder what the opportunity is for Noram in 2023. So again, one of my goals when I joined the company was to raise capital. I'm going to talk about the strategic financing where a group came in and bought 17% or 16.8% of our company. Really, I went to a couple of friends that I've raised some money over my years and where I've done some stuff in South America and Quebec and Canada and the US. And I said, well, I need $17 million. And they go, what do you want to do? And I said, well, I want to get all the way to bankable feasibility study. I don't want to go back to the bankers and the funds and the market because it's going to be horrible. COVID just ended. Can I have 17 million? But I want it at a premium to the market, and I don't want to give you a warrant, and I'm not going to pay a finder's fee. So they said, sure, we're in. So in Q1, we raised 17 million at 82.5 cents with no warrant. They now are our largest shareholder. They're one of the most significant investors in the lithium space, Waratah Capital out of Toronto, and also LRC out of New York. So now they own 17%. Don Ross in Toronto owns 5%. Management owns an additional 12%, which I'll get on to the next slide. So really, this is a big year. We're pushing to the PFS, the single most important technical report in a company's history, because it really tells the story of what's going to happen in the FS. So we did 12 holes, longest intercepts in the corporate history, some of the best grades. It's done. A resource report's coming out very quickly. It's kind of really highlight what we have and align us to all of our peers and probably open a lot of eyes of what we have, and then look at our valuation going, well, something's wrong here. And we're a couple of months late, but we're on track. We still got 15 million or so in the bank. This is a deal. I've already mentioned what we have with Waratah. Again, all this is on the website under investors and presentations. So this is the check marks. Where are we? We're Nevada. We've got a nice, reasonably good PEA of 2.7 billion at 50-some% IRR. We got enough resources for a couple 100 years. But the third bullet here, the PEA resource of 1.8 million tons measured and indicated 3.9, that's going to change significantly in the upcoming weeks. The 12 holes upgraded it. Most of that inferred is probably going to slide over to the measured and indicated, giving us what I'll show at the end of this presentation, a really interesting comparison of our tons and our grade versus two of our main peers in Nevada, which would be American Lithium and Cypress, which is right next door to us. Big catalyst coming up, which is the PFS resource update. No more additional dilution to our shareholders for the next couple of years. I've mentioned the share owns by the management team, and we're gonna be stuck with less than 90 million shares out for the next 2 years. So that's pretty good for a little junior that's been around for 7 years. And lovely chart. It kind of matches what's been going on in the industry. And I'm going to show on the next slide saying, you know what, we're a clay lithium explorer / developer. Now, if you do the math on the share price, market cap, EV, our enterprise value in US dollars today at this very moment is 18 million. 18 million US dollars with 15 million in the bank, not going to dilute the share price and fully finance all the way to the end of the final feasibility study. And I'll show some interesting graphs later. There's our chart. And look at all, this is a year. So if you kind of look at where we are, in the last year, we've actually outperformed most of the lithium explorers. If you go back 2 years, we're actually the number one, even though we're all doing horrible. But that's the market. We expect it to change. We're optimists. We're miners. I've been in this industry too long to recognize that it doesn't come back. I'm the new guy. Everybody on these 2 pages have been here for 7 years from the very first day when they staked the project, drilled the project, did 6 resource updates, financed the project out of their own pocket, and most of them actually still have the same paper that they put in the deal 5, 6, 7 years ago. I'm not going to go through it. I don't have the time. Again, I'll highlight one individual, Adam Falkoff. He joined just before me last year. He's extremely politically connected in the U.S., which will help us in the permitting down the road. And Dr. Sarabi just joined. He's going to be really our eyes on the technical side as we watch the PFS and FS come out. And Simon's a new guy in Europe watching as we look to look at other deals. And it's not going forward. Come on. There we go. We're in Nevada. I'm not going to focus too much. We're right next door, adjacent to the only lithium brine or the only lithium producer in the U.S. They've been there for 60 years. They're going from 6 to 12,000 tons LCE per year. We're going to do about 32,000 once we get this thing. It's not working. There we go. So I'm not going to go through the bullets. Really 3 kilometers long, 1 kilometer wide, about 100 meters deep. We've actually drilled more holes pretty much than any other of the lithium clay developers in the state of Nevada or Arizona, except for Lithium Americas, which is 6 billion market cap. So we'll show that at the very end. Interesting on metallurgy, we've been watching Lithium Americas, Ioneer, American Lithium, Cypress, and Ioneer. All those guys spend a couple $100 million. So we're fine watching. We're fine being the little guy. We've got 15 million. Let's conserve our treasury. Cypress immediately next door is doing great work. It's the same dirt, same mineralogy, geology, metallurgy. So when they solve it, they're solving our problem too. So we'll sit back and watch them, do our own internal studies. We've hired Dr. Sarabi to help us. This sheet is going to change very soon. It's going to highlight a significant change in the measured and indicated, and that's all we really care about because measured and indicated goes in the PFS, inferred drops out. It's going to be good there. This is going to change too, but on the left-hand side is the grade distribution, right-hand side is the resource classification, high-grade core, lots of measured, lots of indicated and inferred. Every single bit of dirt on our project we could accidentally throw through our plant and it would still pay. The margins are incredible. So when we did our study, we said, well, Cypress did their PFS, let's do our PEA, apple for apple. Our project actually looks better than theirs, but let's just pretend it's 2 halves of the same deposit, and really every line should probably be the same. This is at 9,500 and $1.3 billion NPV. It's a little dated because everyone's thinking that the long-term price, which I haven't got a clue, is going to be 15 or 17 to 25,000 per year for the next 10 or 12 years. So big opportunity to get this thing into production in the next, probably the next 4 years. Our mine plan versus Cypress, take a look on the website. This is at 14,250. It's a nice number, 2.7 billion. And the operating cost is 33.55. We're in the lowest quartile of the entire global projects, all going into production by 2025, according to Canaccord. And this sheet really shows our project versus a number of other projects, either around the world in Canada, the US, and even a couple of our neighbors, Ioneer and Cypress. Ioneer, if you look at their numbers and ours looks a little better, but we're 2 years behind them. They're getting permitted. So it really shows at the bottom of the chart, 315, 41, 974. We're going to have a re-rate. We're super tight. We're fully cashed up. We're going to get to the same level of all these guys with never going back to the market. And there's our little 33.55. What I like about it, it's going to go up. It's probably going to go to 35 or 37 or 4, but we'll still be below or in the low quartile of the entire market of all these guys that supposedly will be in production by 2025. I like being on the left. This is where, the Piedmonts were in the Standard and the Lake resources. Every bullet, the 6 bullets of the upgrading and the PFS and the baseline and the final fees, we're fully financed to go right through the very end without diluting our stock. Hopefully we'll climb up to the right. I think we will. And the last couple of slides here, we're going to move that little green bar of Noram, the 178, probably up. We haven't finalized the report and the board hasn't signed off and the technical guys haven't done their job. Maybe up to 4 to 5, hopefully up towards the 5. If we hit 5, it's a game changer for our asset. And if we look at ourselves compared to the rest of the industry, the little white box is what I'm going to fill in here in the next couple, 3 weeks. We're going to change the 178 on the third row under our line to hopefully closer to 5, hopefully 4.5, 5. And if you look at the grade, we actually have better grade than Cypress, better grade than American Lithium, Spearmint, and Brata. But we get $3 per ton of in-situ ground sitting next to a highway, fully financed with power lines going through the middle in the best state, or the best place in the world, according to Fraser Institute, advancing a project that looks really good. So it should be a lot of fun over the next year. Our job is to execute, de-risk, get a re-rate, reward our shareholders. It's not about anybody else. And it's another way of looking at the chart that I just made. Really, it's interesting to see some of these groups. You know, Brata had 300,000 tons in their resource, and they're getting $84 a ton. It's interesting to see where we are. I think we're going to climb up. The next chart you see like this in a couple, 3 weeks when we announce it will be just focused on measured and indicated, and hopefully we can show that we're fairly similar. Last slide. Really, I've said everything in the quick facts. Next steps is really de-risk, re-rate, PFS, resource, PFS in Q1, advance to final feasibility study. And it's funny, over the last 2 days I've had 25 meetings in my room across the street at the Hilton. And the last 2 days, we're 18 million EV US. I spoke to Fortescue, BHP, Rio Tinto, Anglo American. And these guys are phoning me to say, Peter, can we have a meeting? You got lithium, and we don't have any. So it's exciting where we're at. It's going to be a big year. I really appreciate everyone's time. And usually at the end, I say my little cell phone, phone me, email me. I don't care if you have 1 share or 10 million shares. You're all the same to me. Just find out about the story. Do your due diligence.